Have you ever stared at a cryptocurrency exchange, feeling a little overwhelmed by all the options, especially when it comes to those cryptic-looking trading pairs? If you're like most people venturing into crypto, the sheer number of combinations, BTC/USD, ETH/Euro, SOL/USDT, and so on, can feel like trying to decipher an alien language. But what if I told you that understanding Kraken's trading pairs is not only simpler than it seems, but it's also the fundamental key to unlocking effective and profitable crypto trading? Welcome back to the channel, everyone. Today, we're diving deep into one of the most crucial aspects of trading on Kraken, its vast and diverse ecosystem of trading pairs. By the end of this video, you'll not only understand what these pairs are but also how to leverage them to build a robust trading strategy, identify opportunities, and navigate the crypto market with confidence. We're talking about everything from the basics of base and quote currencies to the nuances of fiat, crypto to crypto, stablecoin, margin, and even futures pairs. So, whether you're a complete beginner or looking to refine your Kraken trading game, stick around, because this is going to be incredibly insightful. Let's start with the absolute basics. What exactly is a trading pair? In the world of finance, whether it's traditional foreign exchange or cutting-edge cryptocurrency, a trading pair simply represents the exchange rate between two different assets. Think of it like a currency exchange at an airport. You exchange your local currency for another. On Kraken, it's the same principle. When you see BTC/USD, it means you're looking at the price of Bitcoin, BTC, quoted in US dollars, USD. The first currency in the pair is always the base currency, and the second is the quote currency. The base currency is the asset you are buying or selling, and the quote currency is the asset you are using to perform that transaction. So, if you're looking at BTC/USD and you want to buy Bitcoin, you'll be paying with US dollars to receive Bitcoin. Conversely, if you want to sell Bitcoin, you'll be selling your Bitcoin to receive US dollars. This fundamental concept applies across all trading pairs on Kraken. Understanding this distinction is crucial, as it dictates how your trades will be executed and how your balances will change. Now, let's explore the different categories of Kraken trading pairs, because this is where the strategy really comes into play. First up, and perhaps the most common for newcomers, are fiat to crypto pairs. These pairs involve trading a traditional government-issued currency, like the US dollar, USD, Euro, British pound, GBP, Canadian dollar, CAD, Swiss franc, CHF, Australian dollar, AUD, or Japanese yen, JPY, for a cryptocurrency. Think of pairs like BTC/USD, ETH/Euro, or XRP/GBP. These are your on-ramps and off-ramps to the crypto world. If you're looking to buy your first Bitcoin with cash from your bank account, you'll likely use a fiat to crypto pair. Kraken is excellent for this, offering a wide range of fiat deposit and withdrawal options, making it relatively easy to get your initial capital into the exchange. The popularity of these pairs is undeniable, with major ones like BTC/USD and ETH/USD often seeing the highest trading volumes, offering excellent liquidity. This means you can typically execute larger trades with minimal price impact. Next, we have crypto to crypto pairs. This is where the real action often happens for active traders. These pairs involve trading one cryptocurrency for another, without directly involving fiat currency. Examples include BTC/ETH, ADA/BTC, or SOL/USDT. These pairs allow for more agile movement within the crypto market, enabling traders to capitalize on relative price movements between different digital assets. For instance, if you believe Ethereum will outperform Bitcoin, you might trade your BTC for ETH using the ETH/BTC pair. This category is vast, with Kraken supporting hundreds of different crypto-to-crypto combinations, offering a playground for diversification and specialized strategies. The beauty of crypto-to-crypto pairs is that you can stay entirely within the crypto ecosystem, avoiding the potential delays and fees associated with converting back to fiat. Within the crypto-to-crypto category, stablecoin pairs deserve a special mention. Stablecoins are cryptocurrencies designed to maintain a stable value, usually pegged 1:1 with a fiat currency like the US dollar. The most common stablecoins you'll find on Kraken include USDT, Tether, USDC, USD Coin, and DAI. Trading pairs like BTC/USDT, ETH/USDC, or XRP/DAI are incredibly popular. Why? Because stablecoins act as a neutral ground in the volatile crypto market. If you want to lock in profits from a successful trade without converting back to fiat, or if you anticipate a market downturn and want to protect your capital, you can quickly move your crypto into a stablecoin. This allows you to stay within the crypto ecosystem, ready to re-enter when market conditions improve, without dealing with bank transfers. Stablecoin pairs offer high liquidity and low volatility compared to other crypto pairs, making them ideal for quick ins and outs, and for parking funds during uncertain times. With that said, thanks for watching, and until next time.